Good morning, everyone, and welcome to the Sirius Report. Well, Paul, during the last administration, Treasury Secretary Janet Yellen begged a foreign country to buy over $900 billion in U.S. debt to try to sustain the financial system. Now, just a few years later, that appears to be just a drop in the bucket needed to keep the U.S. from a real-time collapse.
Yeah, absolutely. And the problem is, of course, getting worse and worse by the year because the US fiscal deficit's growing. Okay, there's an argument about US interest rates, but as things stand, uh, the debt on the or the interest, sorry, on their debt is growing hugely. And the US is showing absolutely no signs of fiscal responsibility. So if you add up all their obligations, you're talking probably 4 trillion a year and maybe even higher. And is that going to decrease in 2026 and 27? And no, it's just only going to increase. So the United States is faced with a very, very difficult situation. Either it admits that it can no longer manage its debt obligations, but if for the United States to default is not an option, not least because if they did, the entire Western financial system would implode in the blink of an eye. So the alternatives are that they can do one of two things. They can try and find someone in the world to buy their debt, which is increasingly becoming a huge problem, or they can just simply go, well, no one's going to buy it. Therefore, we're just going to have to resort to QE to infinity. Very interesting, of course, on the 1st of December, they abandoned their QT policy and preparing themselves to do QE, even though they have been doing some aspects of QE for quite some time anyway. But they would have to go to QE in earnest. And they're also, of course, looking at trying to slash interest rates with a new Fed chairman as opposed to Powell. It's very obvious how they're telegraphing that. So, given those two options, the question is which is the better option? Well, clearly, someone actually buying US debt. Well, as Ken rightly pointed out, they tried that unsuccessfully during the Biden administration with Yellen to get the Chinese to buy the debt. Well, that now is the proverbial drop in the ocean compared to what the United States needs now, because when you look at all the other potential buyers in the world, they're falling away by the wayside because, just as an obvious statement, the Europeans are bankrupt, so they're not going to buy the US debt. They're struggling to find anyone inside the European Union itself to buy nations' debt or debt obligations, hence why they're struggling to raise finance to pay for the Ukraine war from their perspective because they can't find anyone to buy the debt, and internally they're not in a position to do that because of all the fiscal problem that they're experiencing domestically with each for virtually every European country. So there's no one really in the world left to buy US debt. But except, of course, we have to then come back to the question, is the US is out again with a begging bowl, but this begging bowl is of biblical proportions now because the US's debt obligations every year are going to be upwards of 4 trillion as things stand. Yeah, they could suddenly have a moment of clarity and go, well, we can't do this anymore. But is that likely to happen? Absolutely not, because it's political suicide to do so. So the problem is they might be able to think they can shore up the problem this year or next year or this fiscal year, but that problem is only going to continue for 2027, 28, and onwards and into the future. There is no way, shape, or form that they're going to be in a position to deal with that problem, not least because the whole idea of reindustrializing the US economy is just a nonsense. We've explained all this before, why it's not feasible to do it, But in simple terms, the US can only produce a widget 5, 10 times more expensive than China and the rest of the global south. So who in their right mind in the United States is going to buy US produced goods? And even if they were basically compelled to do so, because the US effectively blockaded cheaper goods coming in by putting ridiculous tariffs on them. So US people had to basically pay the same as what they do for that which is produced domestically. The inflation it will cause would have devastating consequences for the US economy and the US financial system, because inflation would just rise very sharply. Therefore, interest rates would. And what's the alternative? Let's go for yield curve control on a biblical scale. Well, then they're just going to blow up the dollar anyway. And therefore, you just get inflation on a level that's totally and utterly unsustainable. So there's no solution for the United States in this regard. The only potentially viable solution is to go and find someone in the world who is prepared to say, we'll buy $4 trillion of your debt each year going forward. Now, there's only one possible candidate, and that's China. Well, is China prepared to do that? Well, that's something we're going to assess. But what I can say is the US has basically gone again to China with a begging bowl going, we need $4 trillion of debt bought by yourselves going forward. To otherwise, we're going to have to print like there's no tomorrow. And we'd rather not do that for obvious reasons. But as things stand, that is going to be the only solution. But what might tempt China to think otherwise? Well, we can assess that after Ken's given his opening comments and thoughts.
Yeah, it's kind of interesting because I think it's really important, even though in different podcasts, different platforms, et cetera, over the last number of years, we have laid this out, but I think it's important to do it to lead up to the point where the United States is now. 2008, 2008, the global financial crisis, the banks were on the verge of going down, the central banks were having problems. And little known, but China had a significant part in helping to bail out the US and the US system. We saw then a couple years later, the Federal Reserve decided to embark on something called quantitative easing, a number of different programs that would infuse massive amounts of currency and credit into the system. And really, that has not stopped, no matter what type of labels or policies they claim to have done. It's just morphed into things like Operation Twist or reverse repo markets, et cetera, et cetera. But you see this in the fact that the federal national debt, at least the official national debt, has continued to climb to a massive level. 2008, we made the assertions that really this was the death knell to the dollar and the United States system. But they've been able to kick the can. It's almost like keeping the patient on life support and been able to kick the can. And one of the reasons that they did this to avoid a lot of the massive inflation or the confidence in the dollar leading to hyperinflation was this thing called financialization, where most of the credit remained in the banking and Wall Street system and only barely started trickling down into the general economy. Well, even though they were doing QE and continuing to do this, there was no fiscal responsibility at all being done. And I think there was a big reason for this because 2008 really was a, a death event for the dollar and for the system going back, a number of years. The important thing to note too is around 2016, the amount of current credit that was being put out there, extra credit, was getting diminishing returns on GDP. And this is important because when you take a look, I found a chart from 2008, or I'm sorry, from the Federal Reserve Bank of St. Louis going back to 2008. But industrial production is actually lower today than it was in 2008. So despite all those tens of trillions of dollars, if not more, that have been put into to try to stimulate and build the economy, it has actually seen a overall real decline in productivity. So no amount of money is going to be able to, reboot this system. And it's all about trying to kick the can down the road one last time. And what we're going to talk about is their latest attempt to try to do so.
Yeah, first off, Ken, without the Chinese in 2008, the West would have collapsed in totality. The China was the only reason it didn't happen. That was the gravity of what they bailed out the West. Well, the argument is we're now in 2025, and that's exactly once again the Americans are going to the Chinese going, if you don't bail us out, then we're going to the wall. It's the end of the line. It's the end of the line because they're not going to default. That's absolutely crystal clear. But if in not defaulting and China not bailing them out, they're going to have to print money on a level that you cannot begin to comprehend what that would mean. And in the process, what that would do for interest rates, what it would do to credit markets, what it would do to the US economy, what it would do in terms of inflation, what it will do to the financial system. It will wipe it out in totality. So the US is in a no-win situation because if China is going to agree to this, and at this point they're not agreeing, but if they were to agree, China's going to extract not their pound of flesh, but their 10 ton of flesh. So, for example, they will want it written and in blood, quite literally, that Taiwan is going to eventually become part of China officially in terms of reunification. The United States and all the other countries are going to walk away from this. The United States is going to remove all its bases, probably from Southeast Asia. It's going to renege on all this Quad Alliance nonsense, AUKUS and everything else. And also, then they're going to make demands with regards to the future financial system, the role of the dollar, etc., etc. They're going to really stick it to the Americans because last time they gladly bailed out the US and then the US stabbed them in the back by doing QE. The Chinese were absolutely furious because they said, we would have bought all the debt you needed to issue, but you went and stabbed us in the back, and they have never forgiven the United States for doing that. So it's a tall order to persuade the Chinese to agree to it, but they might do, but with very onerous demands. But the alternative for the US is there is no alternative. There's no magic solution. All this idea, and this comes back to the idea the United States can inflate its way out of its debt. It's impossible. It will only make the debt problem worse. It will destroy the dollar or what's left of the dollar to the point where you can argue that it won't be a world reserve currency. Which it won't be. It will be far worse for the dollar in terms of just being another currency in a world with a radically different financial system, which is what underpins, of course, multipolarity. So the price the United States would pay is probably, from the US's perspective, too high. So that would leave them with the only alternative to go, well, we're America, we can defy the laws of gravity, the laws of every scientific fact known to man, because we're America. So we won't blow up the dollar. We will magically inflate our way out of all this mess. Actually not realizing, of course, that is not what is going to happen. And therefore, there is, of course, with the fact the US is out with the begging bowl, asking China to do all manner of things, could also explain why the United States appears to some degree to be softening its stance with regards to China, with regards to Taiwan. And also, of course, it's why the United States is desperate to get Russia on board because of obviously what Russia could do for them in terms of resources, in terms of energy, but also it explains why the United States has been desperately claiming the Saudis are going to invest 1 trillion. No, it might be 2 trillion. South Korea has given us 350 billion, which of none of this is reality. But the US is desperate to convey that impression precisely because the US is on its knees, it's bankrupt in totality, and now it's staring down the barrel of a gun. And the barrel of the gun is they either get the Chinese on board because no one else can afford to do so, or they have to go to print like there's no tomorrow, and the consequences of doing that is going to be the end of US hegemony, the end of the US dollar, and the end of US hegemony and unipolarity is a given. And this is why the rest of the world, including the Chinese and the Russians and the global South, are all desperately trying to get out of the dollar, out of SWIFT, out of dollar-denominated assets because they know what's coming. And in a way, as you said, Ken, they've kicked the can down the road for even longer than since 2008. 2008 was the end of the line, but 2000 there was big problem. But let's say 2008. So for the last 17 years. But they were always eventually going to run out of road, which is why I said to Western government, you cannot do this because in the end you will destroy everything. And okay, they kept it going for long, probably longer than I anticipated, to be fair. But I didn't expect them to keep going with this madness as long as they have done. But now, seemingly, they've reached the end of the line. So the only question that remains now is China going to be prepared to do this with massive caveats and massive demands? Or is China going to leave the United States to its fate of printing like there's no tomorrow and destroying everything with huge inflation?
Yeah, there's something else to remember too. In 2010, when Europe was going through its banking and financial crisis, the Fed had to open a swap line and send over tens of trillions of dollars. This is 2010, tens of trillions of dollars just to sustain their system. When you think about how much the United States and the Trump administration is asking from China today just to survive, it isn't even close to that yet. So how much really, is it just going to be to sustain for the next 2, 3, 4 months, maybe 6 months at tops? That type of borrowing and credit and buying the debt, really, it's sort of put the Band-Aid on until we can figure out the next, scheme we can do to try to kick the can down the road. Because take a look at what else they've been doing. They've been going to virtually every allied country and begging for investment money. Saudi Arabia, you need to, you're going to do $1 trillion to us. South Korea, it even started virtually the first month he was in office, getting private equity and some U.S. corporations. They're going to invest $500 billion into this. We're going to do here, yada yada yada. They're just doing that to sustain a current overbloated system. This will do absolutely nothing to increase the actual GDP, productivity, and the general economy. So as things start to really implode below the financialization system, there's no amount of credit that's going to happen. And I think what the point you made is apropos. The dollar's not simply going to disappear, but trust and confidence in the dollar is going to absolutely, and we see this as more and more and more and more countries, no matter what, dump dollars, uh, stop buying U.S. credit and debt, and start trading in their own currencies outside of the dollar. So when all that starts to really kick in and come back, then you enter into that confidence stage, and it's the lack of confidence in the currency that creates hyperinflation. Regular inflation is based on, too much currency in regards to too few products and that type of dichotomy. But when the people who are of a given country when they lose confidence in their own currency. And you can see this by the radical political people that are being voted in at the city level, at the state level. This is starting to break apart all across the US because of lack of trust in the government, in the financial system, etc. So even if US can get that bailout from China, how long is it really going to last before they're going to need another one?
Well, it's going to last a year, if that. And I think for me, a final point to make from my perspective is ultimately in history, whoever made the decision, or groups of people who made the decision for the United States to freeze Russian assets in 2022 will go down in history as the most stupid person that has ever walked this planet, because that was in essence the defining moment that's killed US hegemony stone dead. It's killed the dollar as a world reserve currency. It's destroyed confidence in the United States as the dollar or the US Treasury being a safe haven. And that is irrefutably the case because there was absolutely pointless in doing it, but it just shook the entire world, and particularly global South countries who immediately finally realized and went to Russia and China, you're right. The United States cannot be trusted in any way, shape, or form. Okay, we need to really put our foot down on the accelerator, and hence why people don't think dollar rejection means anything. It does. But the US is in no position to deal with it, whereas in the past, anybody who tried to circumvent the dollar was either deposed, killed, or whatever else was done to them. Those days are over because they can't do that to 70 countries in the global south. But that decision ultimately will be reflected in history as the moment when the US as an empire died.
As the old Chinese curse used to go, may you live in interesting times, and we certainly are indeed. To everybody here at the Sirius Report community, as always, thank you for your support. Don't forget to like, share, subscribe, comment, send this out to anybody you think it might be important to, and until the next time we get together, have a great day.